let's get into the things that you brought with you and some of the thoughts you have. It revolves around gold. And the first is a little bit of you're going to have to walk us through this, but you can speak to this, and we're going to look at some charts on the back end.
Sure. Just what this tries to depict, right, is we know that equities as an asset class, as measured by the Standard & Poor's 500, had a high and a peak for January 2022, basically 15 months ago, thereabouts, plus minus. And the table simply, columns and rows, shows what would be expected, right? That since then, right now the market's down 20%. It was down more in October, but from the peak to present is what we're looking at. The stacking order is right in line with what one would expect, right? Gold is actually up. It's serving its purpose as a hedge. Gold miners, they're still stocks, so people get margin calls. They still sell stocks if they're under pressure. But gold stocks are down 1/3 as much as stocks in general, right? And that's what one would say should happen, and as would be expected, right? Gold outperforms in drawdowns, the metal, the commodity, and gold stocks, while still down in a market that's down, are down so much less.
Let's take a look at the gold chart, and it's all relative performance, as you say, which is why the GDX, I will tell you, is hung in there rather well, because to your point, they're still stocks. And on down days of magnitudes like we're seeing, I mean, I think 75% of the market, if not slightly more, has a correlation of 1 to the S&P, meaning that it's going to sell off regardless. There are obviously outliers, but you're right in pointing out the fact that they're still stocks. But with that said, they've actually outperformed the broader market considerably. Here's a gold chart. It's tough on the eye, and it's been a difficult one to navigate, but you're going to help us. You're going to walk us through this.
Right. So this is a gold chart over the past 2 years with no lines, no moving averages, which is to say no arrows, no judgments, no conclusions. But let's put in some. That's what my eye sees. Let's maybe take it away and put it back. One could say, who cares what your eye sees? That's just, you just drew some colors like a kid on okay. But that's what my eye sees. Let's put in a final iteration. I think ultimately, right, we're going to move up and out from this range, and that gold is something you want to be in versus not in. If it gets down to in or out, long or short, playing or not playing, I want to be in gold and not in stocks.
I agree with you. You know that I've shared that view. People will say, okay, Guy and Carter, how do you play it? I see a bunch of questions in the comments section. I've been a steadfast believer that if this plays out the way I think it will, you do not want to be in GLD. You want to be in some other instruments. And Danny Moses talks about the PHYS, the Sprott Physical Gold ETF, is a way to play it. Now, I'm not necessarily going to, drill down on you on this one, but your thesis in gold, I think, is correct. And I look at this, and maybe I'm wrong, but do you see like a reverse head and shoulders here, or am I reading too much into it?
Well, yeah, sure. So they're head and shoulder tops and they're head and shoulder bottoms, right? They're reversal formations, something that's changing direction. This is a well-defined head and shoulders bottom, and it projects to much higher levels if and as it is concluded, if the pattern plays out.
Exactly. And I'll amplify that and say the following. There might be a lot of people out there that are talking a bullish game or that are bullish in gold, but the commitment of trader reports and some of the things that we look at suggest that although people may be bullish, people are not long. Now, that's not nuance. That's an important distinction, because what's going to wind up happening is when gold finally gets on the radar screen of some of these larger funds, it's going to be at significantly higher levels. So we're going to get, I happen to think Carter's right, we're going to continue to grind higher, but the real move is going to take place when you see actual money flows from some of the market participants like hedge funds. Now, central banks have been buying gold hand over fist. It has not manifested itself in the price. But when you start seeing hedge funds and some of these bigger institutions start to buy it, that is typically when you get sort of these dramatic moves. Sometimes it's to the downside as they're getting out, and we've seen that historically. And I think we're on the precipice of it happening to the upside. Now, I don't know what the trigger points is. I don't know how their algorithm is set up, but I will tell you they'll start buying gold at higher prices, not at lower prices. And then that might seem counterintuitive, but trust me, I've been doing this a long time, and I know how that sort of works. You brought with you also a bunch of numbers, a bunch of plus and minus signs that you're also going to help us navigate here, because this to me is fascinating.
Yeah, I mean, there's maybe we spend a second on this. There are only three groups, right? There are people who never own gold, don't want to do it. They make fun of it. That's fine, and they say I don't believe in it in any capacity, not only as a long-term hold but as a hedge. There are people who don't want to own gold, basically, but will embrace it as a hedge, and then they're gold bugs. They always have it.
Mm-hmm.
So let's address whether it is a hedge or not. This table does that. It's not my table. It's not Guy's table. It's just the table. And here's the inconvenient fact for anyone who thinks or argues that gold is not a hedge. The final column. So what you have is every single drawdown of greater than 20% in the history of the S&P from an all-time high. That's the red column in the middle. You got the high of the date, the market low, the drawdown, and then gold's returned right next to the drawdown, and then the delta, the difference. And so that final column is all green. I mean, it's incontestable. And that's what we looked at it originally. I mean, right now, gold is doing its job again. And yet people kind of make fun of it. Well, okay. So that makes it more for the rest of us.
I agree with that. It's interesting, the outlier being in the early 1980s. And, there's probably reasons why. I'd have to go back and look exactly. But, that one sticks out. But what really sort of reverberates is you put these moments in time. I mean, you're not making it up. The numbers are what they are. And, if you'd see where we are now and what's going on in the world, it stands to reason that mean, which is up 44%, we probably see that, and I don't think that's extreme to see it. And it suggests exactly sort of the outcome we just talked about a few minutes ago. So I appreciate you bringing this along. We'll put it on our website. I'm sure you have it up on Worth Charting as well.